right, folks, stocks trading on thin ice right now, fractionally higher. But, recently the final hour of trade has seen these rallies wilt. Part of the problem is maybe the market was simply overbought, overvalued, even though almost 400 S&P names are down for the year. So how do you make money in such a very selective environment? I have two of the best that help us with this. Nicholas Wealth Management's David Nicholas, along with Point View Wealth Management's David Dietze. I got to go with last name, guys, because of the Davids here. Nicholas, let's start with you. Just it's not hard to argue. We had a 46% rally from the lows, from the intraday lows on March 23rd to the high points a couple of weeks ago. But where do we go from here?
Yeah, Charles, with a VIX of 35, I mean, as investors, we just have to expect we're going to see volatility. The comeback's been massive. So I just think as an investor, look, we got to have the understanding that there's going to be pullbacks. This is a time for you to buy positions that you've been wanting to buy. I think until the VIX gets below 20, we're going to see more of this. So I don't know, Charles, you may disagree, but I don't think it would be unhealthy to see a 10 to 15% pullback. I almost feel like there's this malaise over the market that we haven't seen that yet. So I'd actually be encouraged if we saw that to get it out of the way and let's move forward. So that's where my outlook is still really strong. But we should expect some pullback in the short term.
I don't disagree when they happen. Most of the time they are healthy, Nicholas, because Dietze, it's part of investing anyway. There wouldn't be a channel. We wouldn't. None of us would be in business if there were never any pullbacks or corrections. But by the same token, I like seeing rallies tested, and if they hold, I like to make money from them holding. So today's action is pretty good compared to what we saw yesterday. I did a couple things today, but I mostly have dry powder. Where are you, Dietze? Because you're usually pretty aggressive.
Yeah, absolutely. So, I mean, I agree with the other guests that a little pullback here would actually be healthy. We're on track with perhaps the best quarter since 1975. It can't go in a straight line. We are seeing some issues in terms of the reopening of the economies, but you're not going to have that national lockdown. So, we'd actually look at the financials here. It's almost like Y2K tonight because people are so nervous about what the stress tests are going to tell. I think there's a little bit of sell in the rumor, and there may be some buy in the news, even if a couple of the banks end up having to pull back their cash distribution policies. The market's telling you Wells Fargo needs to reduce its dividend. It probably will have to do that, but I think actually investors will breathe a sigh of relief because they'll put them on firmer ground and it can go from there. So that's one area, the financials.
Of the 11 S&P sectors right now, only 3 are up, and only really the financials are up substantially, up 1.7%. David Nicholas, is that one of the things that we're looking for, leadership outside of those names that everybody knows by now? You talked about buying dips. Everyone, we buy the dips. We go right back into those same names because they've made us money time after time after time. But there seem like there should be more opportunities. That's what I'm looking for, a broadening out of this rally.
Yeah, absolutely. I think a broad-based recovery would be good. My contrarian play is financials. I think financials are set up to rally powerfully when the gap between expectations of write-offs are met with the reality that the situation for banks, at least in the second quarter, isn't going to be anything like the first quarter. So I like leadership in a space like financials. I think if you want to play a recovery sector with lower risk, for me, that's financials.
Financials. Again, they're doing well today. Ameriprise is the #1 performer there. Wells Fargo doing very well. Some of the bigger banks, up fractionally. We just had Kansas City Southern on the screen, up almost 3%. Earlier in the week, takeover rumors, David Dietze. What about acquisitions? What about mergers? We haven't seen that sort of thing happen. Even when we saw the sharpest bear market in history, are businesses too afraid to make these mergers? Because now seems like the time that you would do these.
This is the time. Obviously, the potential targets are down. The problem for a lot of acquirers, they like to use their own stock. And for many of them, their currency is less than where they want it to be.
Okay.
So I think it's just going to take a little bit more time. I put a good word in for the home builders. Stay at home is going to be stay in a new home. There are a lot of people skeptical of these markets. They want to get in real estate.
We got to leave it there. David and David, great information, always fantastic advice for the viewers.